What's up, guys, and welcome back to Rougefx. Today we're going over how to officially use a Fibonacci retracement tool. This is simply understanding where our mitigation sequence key levels are very much located, as well as how to officially use them, what to expect when price, definitely retraces to either the first fair value equilibrium or the third, of course. So when understanding the way price typically tends to retest off of these mitigation sequence key levels, a lot of the times when price essentially will target these mitigation key levels, we will have a essentially price will behave to a point to where it provides a, of course, a liquidity grab and then continues towards the lows. Maybe at times price will use it as a significant mitigation sequence in order to very much understand the failure swing of our newest found protected high, in order to very much build liquidity and obviously raid that, using that as a significant point in which where liquidity is very much located. Price performs its liquidity grab and continues towards the lows. There are many times as well where price would just very much tick our fair value equilibrium, or maybe even our first or third. Really, it's only just important to understand that as long as price is essentially not surpassing our mitigation key levels, any of the three, it is safe to assume price is only leaving, in whichever case, internal range liquidity to come back and very much liquidate, of course, right? So in many different cases, price would definitely leave a weak high, retest, break structure again, leave another weak high, retest, break structure again, and leave another high, retest, and then in whichever case, use the previous higher lows as, essentially liquidity, right? These are a cluster of higher lows, leaving a significant amount of liquidity to very much create future liquidity that's eventually, obviously providing a liquidity grab, shift in momentum, and then obviously an overall break of structure towards initially structural lows. And, eventually major structural lows, of course, right? So in whichever sense, that term, in whichever case, in this case, three white soldiers were essentially three bullish rejection blocks. In this case, it's essential to really understand. It's just simply weak highs being left and liquidated simply because we are reacting toward a significant mitigation key level. If I'm really being honest, price could definitely leave a weak high right here as well, essentially mitigating this significant key level, generally completing its overall QM towards the lows, essentially at that point, essentially liquidating this whole entire three candle formation in general, just to continue towards the lows. It's important to very much understand that these are things that are very much possible. The markets are very much, it's in whichever case, every setup is very much unique within itself. As long as you are essentially pro trend as far as the higher time frame, all you need to do is simply target a lower time frame, in this case low, right? Or in this case maybe a high, essentially, maybe even when it comes to this high, right? It's important to understand that there's a plethora of liquidity within this particular market structure, any kind of market structure regarding the financial markets. It's just you need to very much educate yourself and, acquire the necessary experience to really understand this to its fullest extent, of course. Now, in this case, I'd like to show you what happens when we essentially provide a liquidation of a significant, in this case, probably premium point of interest. However, it's important to really understand that price is not necessarily reaching for a mitigation key level, in a sense, rating for a liquidity grab to eventually take place, right? Instead, price is simply reaching for internal range liquidity and continuing towards the lows, and then leaving any other cause for higher prices, in this case, really kind of ignoring higher prices. In this case, simply because what did we do? Price took out internal range liquidity, broke structure in the opposite direction. We left internal range liquidity as well as rated it. Price has all right to continue towards the lows, of course. This can very much take place from a direct entry standpoint as well. Now, can price definitely leave, in whichever case, provide itself with a liquidity grab, and then, definitely on the lower time frame, very much tick this weak high and then essentially continue towards the lows rather aggressively? That's very much, it's very much possible, of course. It's a simple liquidity grab of a weak high. However, on the offhand, that price essentially leaves a protected high for a liquidity grab, retest, and obviously fails to break a previous low, magnetizing to essentially a mitigation key level, failing to even meet it, right? So essentially having to deal with a near miss. This is simply a liquidity grab that's being essentially formulated as our newest protected high, right? In whichever case, completing our trend line in order to very much continue towards the lows. In whichever case, continuing market structure down towards lower pricing. A lot of the times, my friend, you will be dealing with a half trend when dealing with a significant amount of liquidity grabs that are very much being taken place. At this point, it's recommended that you go down to the lower time frame and really kind of harness your skill, really kind of develop yourself within, price action and market structure, so you can very much understand the relevance between a half trend as well as liquidity grabs, as essentially we have our week low protected high. At this point, only thing we're really reaching for is essentially simply, definitely liquidity grabs, right? And this will very much make sense here in a second as I go towards, or in whichever case, shift my focus toward a chart in whichever case. I really hope you guys very much enjoyed this illustration, and I hope it made sense, right? I hope that you could really get it and really kind of apply it within your own individual trading plans. There will be more gems and concepts just like this, of course, for our members only group. This is really just the beginning. I do appreciate all of you who very much tune in, all of you who very much comment down in the descriptions below, as well as the community. Those of you who are here, y'all are essentially planning to master this skill set eventually within your lifetime. In whichever case, the speed really kind of depends on you. How hard are you willing to work? What sets you apart from the next trader that's essentially working to gain your spot, essentially. Without further ado, let's switch to a piece of chart work that essentially, I guess you could say, proves my essentially my theory, right? As you can see, my friends, we have an opportunity for a half trend, essentially understanding that this is a weak low. It didn't break a previous low, so essentially that's labeling this weak. We have a protected high. Price definitely took out a weak high towards the left, essentially labeling this as our newest or newly found protected high. Now, my friends, as you could probably tell, we have one opportunity for a liquidity grab. We have yet another opportunity for a liquidity grab, really kind of just insinuating this imbalanced close price action that's essentially expanded through. Price fails to break a previous low, essentially leaving a bearish hammer as internal liquidity, mitigating or essentially, most definitely providing a liquidity grab. If you really need me to zoom in, we have a bearish rejection block and essentially an opportunity for a liquidity grab, right? A tick, not necessarily our mitigation fair value equilibrium, essentially, but most definitely the point of interest that's in between, right? In whichever case, reaching for or within a pool of liquidity. At this point, very much bypassing our mitigation key levels, either 3 of them, and very much, again, insinuating a liquidity pool liquidation. So yes, yet another opportunity for a liquidity grab, yet another opportunity for a pool of liquidity to be very much built, of course, for a lower time frame scale in whichever case, this being maybe a slanted high. We have provided with a liquidity grab into an unmitigated wick, looking to rebalance the market out in order to continue towards the lows. Fairly simple, my friends, a plethora of opportunity to really kind of help you understand how important it is to understand your range, understand which range you are trading in, whether that be a half trend or maybe even a full trend, right? Again, when you're dealing with half trends, more than likely you're dealing with quantity within trading. When you're dealing with full trends, essentially, full trends, you're essentially dealing with very much precision. Essentially, you're being intentionally more precise within trading or within your execution in whichever case. We provided with a significant premium area for essentially a point of interest, right? That very much provides a liquidity grab, right? Essentially helping you understand that price is dipping into this pool of liquidity, understanding that there are buy stops that are very much being liquidated, giving price the right to definitely continue towards the lows. It is very much also important to realize that we can very much measure this premium area to really kind of understand what's happening, right? We have left a weak high that's essentially liquidated. This is a start of a pretty significant trend or trend of liquidations that are very much taking place in order to very much continue towards the lows. This is the power of obviously Forex trading or any kind of trading for real. And this is the power of compound interest, my friends. Yes, it does take a while to get to this level in whichever case. However, with hard work, dedication, consistency, and really kind of discipline, not to mention, a relationship with God. Anything is possible within this world, my friends. It's important for you to understand that you can be successful in trading if you are very much willing to work, if you are very much willing to essentially sacrifice every now and then, right? Whether that be your time, whether that be your pleasure, whether that be, in whichever case, taking time to meditate and really kind of work on your spiritual. My friends, nothing comes without sacrifice. If you want this, essentially this life, I'm not gonna say this lifestyle, right? Because of course, we understand trading is a lifestyle, but it's essentially you're having to balance out your life throughout your overall experience within this, right? In whichever case, trading is definitely, it's a life to be very much appreciated, very much essentially mastered to a degree or two, and again, really about coming to that overall equilibrium or homeostasis within yourself, right? At that point, it's just allowing the universe to work and allowing what needs to happen, whether that be a series of losses, throughout the week, throughout the month, throughout the year, throughout the quarter. My friends, if it's for your growth, you're gonna have to go through it, and you're going to have to feel that, in whichever case, negative or ego triggering, in whichever case, portion of your life, in whichever case, right? Because again, life is about balance, and of course, we need to ride the waves of life simply because, essentially, they are there to help us, essentially grow. Of course, it is very much it is very much important to understand that though we very much can have, let me go ahead and adjust this real quick. There we are. Though we can have times where price performs a mitigation of our eventual key level, it's going to do this eventually, right? Understanding that is understanding that all we need to do is wait for our retest, essentially the essential move or expansion towards internal range liquidity. A lot of people will think this is external range liquidity based off of this. It's important to understand that this is not a real high, right? It's a weak high. In a sense, it's a target, right? Because this previous high is essentially going to be located as, or essentially insinuate, a particular high that is not necessarily taking out a previous high, right? So it's a weak high. It's essentially going to be a target, essentially maybe even a trend line. There we are. Though, of course, at times, price can very much create a higher form of liquidity, whether that be a three-candle formation, maybe a consequence of encouragement, really kind of helping you understand that price price very much shifted in momentum. Retest, reach for internal range liquidity just to continue its overall momentum, obviously, towards higher prices or essentially an overall rally. It's important to very much understand the difference between imbalanced close price action inefficiencies as well as a rebalancing mechanism to really diversify your opportunity within the markets. At this point, my friends, we are obviously understanding the difference between two significant ranges available for us if, of course, we understand how price essentially moves or behaves within our regular, lives of actually trading, whether we are eventually dealing with a half trend or maybe even a full trend, of course, right? Essentially, you can understand the liquidity gap that's taking place and the plethora of opportunity that's built just by understanding that this is a weak high, right? So I really do hope this makes sense, my friends. I hope this made some kind of sense as far as you receiving a deeper understanding within these markets, within price action itself. This is a quick video to really understand Fibonacci sequences a bit more, as well as price action a bit more in depth. I do hope you enjoyed this video. I thank God for being able to do this, being able to develop my career every day, pushing me to get up, pushing me to really kind of essentially stop being lazy. Not necessarily. I understand how hard I generally work in whichever case, but every now and then it's to an extent to where you have to push yourself to very much get up and very much study, very much understand your system in a different perspective, in whichever case, really kind of trying to enhance and really build upon something that's going to bring not only generational wealth to your families, but increase your net worth, right? Because with knowledge very much comes an ability to obviously generate an income, of course, right? I do hope you guys very much understood anything that I was essentially very much discussing with you guys, from our half trends, full trends, what they mean as far as our Fibonacci retracements, the differences between mitigation key levels and essentially point of interest that I very much liquidated, essentially liquidity pools, right? In whichever case, we went over a plethora of decent content in whichever case. Really hoping you guys can use this to really implement your strategies and really kind of get better, right? Most importantly, though, my friends, just continue to study, continue to work, continue to develop within your systems, continue to get better, continue to put God first. I do appreciate you guys for tuning in. Until next time, enjoy the FX.